Hello, this is Doug Hutchins with Kentwood Real Estate with the March 2023 Castle Pines Real Estate Market Update. I'll be talking both about the original communities and the new communities in Castle Pines and giving you some key stats for what's been going on in the market here in Castle Pines. To start out here with, I'll start out with the original communities. And the original communities are, again, those generally that are to the west of I-25 that were built prior to 2015. And if you look here, the average sales price numbers are a bit disturbing to see that in March 2023, the average sales price was $918,000, down substantially from $1,073,000 in March of 2022. However, you got to remember that in the city of Castle Pines, that we have so few home sales that these average sales prices each month can vary substantially. And that shows up here in this next chart that I want to show you here. And the green line in this chart shows you the monthly average sales price. And you can see how this ping pongs around up and down on a monthly basis. So again, we have some high-end custom homes, we have smaller homes, and depending upon the mix of homes that sell each month, the average home price can really vary substantially. So going back to this chart here, if you look at the average sales price, really, if you look at a bigger number in Metro Denver, we're off about 10% from April's highs of last year compared to now. However, prices have stayed relatively steady since August of 2022. And I've seen that trend here generally in Castle Pines as well, both in the new communities and the original communities that we're talking about here. A couple other key stats to look at here are, one, the active listings are up. We have 17 active listings at the end of March, which is way up from March of 2022. However, this is way below the 5-year pre-COVID average. Average active listings at the end of March between 2015 and 2019 were 40 homes. So again, we're 57% below what we typically would see for active listings. So we continue to have low inventory. And part of that is driven by the fact that we don't have as many home sellers wanting to sell their homes. If you look, we did have 21 new listings come on the market in March compared to 14 last March. However, again, compared to the 5-year pre-COVID average, there were typically 31 homes that would list in the month of March, and we only had 21. So we're down a little over a third, roughly a third of new listings coming on the market. So even though sales are slower, we have fewer listings coming on the market, so inventory is staying relatively low compared to historical standards. And the next chart here that I want to show you illustrates that. It has new listings, sold listings, and active listings. And I do this on a 12-month rolling average basis because, again, the monthly numbers can vary substantially when you have a small population like we do in Castle Pines. But the key illustration here is that if you look at the orange line, that's the average active listings, and you can see where the red line is here, that that's right at the 40 number, 40 active listings. And you can see roughly for 5 years, kind of between 2015 and 2020, that was the average 12-month rolling listings on the market. And you can see the current orange line off to the far right is still way below. We're running around 20 homes on a 12-month rolling average that are active. So about half the inventory levels of what we typically would expect in Castle Pines. And the reason for this is illustrated by the new listings, which is the blue line, and the sold listings, which is the green line. So as the blue and green lines are close together, our inventory shrinks. As they separate more, inventory will grow. But we still have a long ways for inventory to grow. Jumping back here to the main chart, the other key thing here that I wanted to talk about is months in inventory. And again, months in inventory is a stat that we look at that typically gives us a guide of where prices are going. Because if you have inventory, typically 4 to 5 months is considered a balanced market where prices would stay relatively flat. If you have inventory that's 3 months or less, you typically would expect prices to increase. And again, in Castle Pines right now, we're seeing months in inventory at just over 1.5 months. So we're still staying under 2 months in general here compared to sales activity, which is a positive thing. And that's why prices have stayed relatively steady over the last several months. And this next chart here shows home prices compared to months in inventory. And the orange line is the months in inventory, which you can see has fallen off. And again, we're still running below, a month and a half roughly here on the 12-month rolling average. And the green line is the average prices. So you can see as the orange line fell, the green line went up drastically. And the red line, the flat red line in here, is that 3 months number that I was talking about. Generally, if you look here, if you see the inventory stayed below 3 months, prices were generally going up. Again, we had an exception last year as the market got red hot, but that's one of the few exceptions that prices have fallen even though inventory remained low for May, June, July, and August of last year. As we talk about the new communities, and again, the new communities are generally the canyons, but you also have those along Legay Road there on the just off the interstate. Those communities are generally driven by the builder sales. And so if we look at what's gone on with pricing in the new communities, it's stayed more flat and level. And that's because home builders do not like to reduce their prices. And if you look at the number of sales that are going on in the new communities, roughly 2/3 of those sales are builder sales, and about 1/3 of those sales are resales, where it's the homeowner selling a property versus the builder. And home builders do not like to drop prices. They will do all kinds of other things other than drop their base prices on their homes. Things such as, hey, we'll finish the backyard for you instead of making you pay for it. Or we'll throw in the appliances now, which we didn't used to include before. Or we'll finish the front and backyard. The other big incentive buyers or builders have been offering buyers here is that they will buy down their interest rates because interest rates have gone so high. Well, an interest rate buy down will not show up in pricing. So that could be a $20,000 to $25,000 value to the buyer because of the interest rate being reduced, but yet that does not reflect in a change in home prices. So typically in the new builder communities, you're going to see home prices stay a lot flatter over the long term. And that's exactly what we've seen going on here. If you look, the month over month change actually in the new communities is up substantially, but that's because, again, of that price volatility. There have been a couple big sales that closed in the month. There were over 2 million, and that drove the average home price up a lot higher. If you look at the rolling 12-month average, though, it's been pretty consistent over the last 24 months with their pricing. And again, thinking back to the chart you just saw in the original communities where you see that ping pong bouncing of average prices on a monthly basis, that's true in the new communities as well. Inventory continues to build, but again, it's still historically low compared to what it was over the last 3 to 4 years. I really can't use pre-COVID 5-year averages in the new build communities because there wasn't really substantial building in those communities prior to 2018. Inventory is still under 2 months again, which is a great number. And again, that would make you think that prices would not be falling in there. And again, with builders wanting to hold the prices steady, that is probably going to stay true for the rest of 2023. I did want to show you this chart here, which is talking about the active, new, and sold listings. I showed you this same chart for the original communities as well. And if you look at this chart here, you can see that the orange line, which is active listings, is growing pretty substantially. And that's because new listings compared to sold listings, the gap between those, the green and the blue lines here, is growing. And that's because, again, inventory is building a little bit more in the new communities than compared to the original communities. But with all that being said, I think in the new communities, again, builders are wanting to hold their prices pretty steady. So I think we'll continue to see pretty steady pricing in that area as well. If you have other questions about the Castle Pines real estate market, feel free to give me a call at 303-886-3437. And remember that we are happy to do a free home valuation for you to let you know exactly what your home will sell for in the current market conditions. There's no cost or obligation to this valuation, but we're happy to come in and do it for you for free. Again, I hope you have a great day. And again, don't hesitate to give us a call if you have any questions about the real estate market here in Castle Pines.